This is the first decentralized futures Hashpower marketplace, and it just started its open beta. This is going to be a step-by-step guide on how to use the futures tab on the Hashpower marketplace. So first, we need to understand what Hashpower represents. Hashpower is the computing power used to secure the Bitcoin network and produce new blocks. The economic value of the computing power changes constantly. It depends on factors like the price of Bitcoin, network difficulty, block rewards, and transaction fees. Traditionally, the only way to gain exposure to those dynamics was spending a lot of money on a mining rig or investing in mining companies themselves. Decentralized Hashpower futures contracts introduce a different approach. A decentralized Hashpower futures contract is an on-chain agreement that allows two parties to lock in a price today for a specific amount of Bitcoin mining hash power that will be delivered in the future. Participants are trading the future cash value of mining capabilities itself. These contracts are standardized and each one represents a defined amount of hash power. 100 terahash is delivered in 7 days in weekly intervals. Each transaction is enforced by smart contracts, which means funds and delivery communications are locked in on-chain and executed automatically when the contract matures. Now let's walk through how the marketplace works in practice. The first step is connecting a wallet. The wallet functions as your user's account. It is used to hold funds, sign transactions, and manage open positions. And no custodian controlling access. That means not me, not any of our dev team, no one can interfere with your transactions. Once the wallet is connected, the next step is funding the futures trading account. This balance is used to open positions and settle trades. The funds remain on-chain and under the user's control throughout the process. You'll need USDC for payment and Arbitrum ETH for the network fees. After you fund your account, the users can begin trading decentralized Hashpower futures contracts. The trading interface operates in a familiar way for anyone who has used futures marketplaces before. Participants can choose to go long if they believe that the value of Hashpower or hash price will increase by the delivery date, or go short if they believe it will decrease. To place a trade, the user selects the price, the date, and quality of the contract they want to acquire, each representing 100 terahashes. Then they submit a buy or sell order in the place order menu. Orders are placed in an order book where they wait to be matched with another participant who is willing to take the opposite side of that trade. Another important aspect is that the user can choose the type of settlement that they prefer. In Hashpower, meaning that they can receive the amount of actual hash power which they can proceed to mine Bitcoin directly on chain, or cash settlement, where instead of receiving hash power, they receive its cash value and the maturity date in USDC. You can see the current hash price and its recent movements in the chart provided by the marketplace. Once the user sets their preference and confirms the transaction, their order is recorded in the marketplace's order book, which works as a traditional did-ask matching system. The order book is shown on the right side of the marketplace. When a buy order and a sale order is matched, a futures position is created. At this point, both sides are bound by a smart contract. Funds are in escrow and the terms of the agreement are locked in. This removes counterparty risk and ensures that the settlement happens as defined in the smart contract. After entering a position, the users have flexibility. They can hold the contract until it reaches maturity, at which point the settlement occurs in Hashpower or in USDC, depending on the user's preference. Alternatively, they can exit the position before maturity and trade it back to the market. This allows participants to realize gains, limit losses, or adjust exposure as the market conditions change. The key metric behind decentralized Hashpower futures, they separate mining economics from mining operations. Participants are not managing machines or infrastructure. They are expressing views on the value of hash power and how that value might change over time. For miners, this creates a way to lock in future revenue and reduce the exposure to volatility. For traders and market participants, it provides direct access to a new, unprecedented Bitcoin mining network and economics without the complexity of running hardware. If you want to find out more information, go to our website, make sure that you follow us, and have fun trading on a decentralized futures Hashpower marketplace.